The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. The global coffee market is in the midst of a fresh rally, with Arabica futures surging past $3.90 per pound in August 2025, and that's their highest levels in more than a decade. A mix of U.S. tariffs on Brazilian coffee, climate-driven supply disruptions, and shifting trade flows has fueled this volatility, raising pressing questions about where demand will go next. Mainland China is often highlighted as a potential alternative buyer to the U.S., but its imports volumes are still far smaller than traditional markets in North America and Europe. So what's really behind the surge in prices? Can China absorb enough of Brazil's exports to reshape global trade patterns? And what risks or opportunities lie ahead for producers, traders, and investors as the coffee market enters another turbulent cycle? Well, to find out more, joining me now is Lucrezia Cogliati, who is the Commodities Analyst at BMI. Lucrezia, welcome to the show.
Hi, thank you for having me.
Thank you so much for joining us. Well, Lucrezia, coffee prices surged past $3.90 per pound this month. That's the highest in over a decade. What are the key factors behind this rally? I mean, how much is it due to structural supply issues like weather shocks versus policy factors such as U.S. tariffs?
So, as you mentioned, coffee prices have risen significantly over the past few weeks, and they've increased 28% in the past month and 47% in the past year, outperforming other agricultural commodities. So, to give context about what has happened with coffee prices through 2025 up till now, we started the year with a significant price rally, and this upward pressure on prices resulted in an all-time high of $4.25 per pound in February. This was mainly driven by concerns about the harvest in Brazil, as the country is the largest producer of coffee globally. It accounts for around 40% of global production. At the start of the year, bullish sentiment was driven by forecasts from the Brazilian National Supply Company and concerns about unfavorable weather in the producing regions of the country. In its second forecast in May, the supply company's outlook improved significantly, and this change in expectation was the main driver of downward pressure on prices. Between May and early August, we saw a significant decrease in these, and in fact, the year-to-date low was reached on August 1st. Since then, this has changed significantly, mainly because of two factors. So firstly, concerns about below-average precipitation in coffee-producing region areas in Brazil, and the second factor, which we believe has been a more important driver, is the U.S. imposing 50% tariffs on Brazil. And because of these two factors combined, we are seeing supply tightness in the U.S., with coffee stocks as of August 26 down 10% month on month and 14% year on year.
Okay, I mean, the U.S. tariffs on Brazilian coffee have disrupted trade flows from the world's largest exporter. So how exactly have these tariffs shifted global supply-demand dynamics? Which countries or traders are benefiting the most from this rerouting of trade?
So the U.S. tariffs on Brazil have been particularly important, given that the U.S. accounts for around 18% of global coffee imports, and it sources around 30% of these from Brazil. So traders responded to the tariffs firstly by scrambling to secure supplies before these tariffs went into place. And following this, they have started to attempt to replace imports from Brazil with imports coming from other producers like Mexico, Honduras, and African producers as well. For example, in late 2024, 48% of U.S. coffee stocks were from Brazil, where this was down to 17% in August of 2025. We believe that the countries or traders that will benefit the most from this rerouting of trade are producers in Latin America like Colombia, Guatemala, Mexico, and Honduras. They will see growing demand from the U.S. This is because they face lower effective tariffs and geographic proximity, more established trade routes, and a similar coffee profile make it logistically simpler to increase exports from Latin American producers compared to other ones, such as African ones.
Okay. I mean, for Brazilian producers, higher tariffs mean losing competitiveness in the U.S. market. So what are the short-term risks for them? Could these risks translate into renewed upward pressure on global prices if demand shifts elsewhere?
Yeah, the short-term risks for Brazilian exporters are very high, and we are already seeing some drop in demand from the U.S., and this is also resulting increase prices, as we just said. But I do want to note that given Brazil's importance as a coffee exporter and the size of its harvest, other countries are unlikely to make up for the disruption. Even combined, Colombia, Guatemala, Honduras, and Mexico produce less than half of the coffee that Brazil produces. And so while turning to Vietnam, which is the world's second largest producer, could also be an option, this country mostly exports Robusta coffee, whereas the US favors Arabica coffee. And we believe it is unlikely for consumer preferences to change. Finally, rerouting supply chains is very costly and complex from an operational standpoint, so changing importing partners is less appealing, particularly in such a volatile tariff environment. We could see some demand destruction in the face of higher consumer prices in the US, but demand for coffee in this market is relatively inelastic. I just want to note that the coffee market right now is in a situation of backwardation, which means that current prices are higher than prices for delivery at later date, implying that traders and market participants are expecting supply conditions to improve and Brazilian coffee imports to the US to increase over coming months. This is largely due to expectations that Trump's tariff policy could shift, given the uncertainty and regular changes that we have seen in recent months. Specifically, the U.S. Secretary of Commerce had previously said that the government was considering exempting products which the U.S. does not produce, and mentioned coffee specifically. So because there's no possibility for the U.S. to become self-sufficient in coffee because of climatic constraints, and considering the highly volatile tariff environment, we believe there is a potential for negotiations to occur with regards to coffee specifically.
Right. Well, Lucrezia, there's growing speculation that China could absorb more Brazilian coffee to offset weaker U.S. demand. Realistically, though, how much of Brazil's surplus can China take on in the near term?
Yes, that's exactly right. So as you said, there has been a lot of speculation and news about the fact that China could increase imports of coffee from Brazil and make up for the risk to the sector due to the tariff. And in particular, there was news that China gave export permissions to 183 Brazilian coffee companies after the U.S. tariffs were imposed. However, while the process of coffee exports from Brazil to China increasing is certainly relevant, and it is already well underway, we believe it is not realistic for China to make up for U.S. demand. Despite the growth in the Chinese coffee sector, U.S. coffee consumption still dwarfs the Chinese one. In 2024, China imported 191,000 tons of coffee compared to the U.S., which imported 1.5 million tons.
Well, Chinese coffee consumption has been expanding at about 9% annually over the past decade. So how do you see this trend playing out over the next few years? Will premiumization in urban markets drive faster value growth compared to, pure volume growth?
So coffee growth has been outpacing other hot beverages and overall consumer spending growth. And our food and drink team at BMI expects this to continue being the case in the medium term. However, although growth has been significant, coffee consumption per capita remains low compared to Western markets and even some Asian ones. So within China, we're seeing the rapid expansion of domestic coffee shop chains like Luckin Coffee and Coffee Coffee, and these are engaging in price wars to provide the cheapest possible coffee to consumers. This highlights the dynamic whereby growth in coffee consumption is still largely dominated by low-cost and high-volume products, and price competitiveness remains a key determinant of purchasing decisions. In line with this, our food and drink team expects pure volume growth to outpace value growth. However, premiumization is important, and it will continue to contribute to value growth in coffee spending. But we highlight that this is an emerging trend, and it is concentrated in the major cities. So in many areas of China, coffee is still seen as somewhat inaccessible, and growth here is likely to come from people drinking coffee for the first time or making this a more regular habit.
Well, as you've just mentioned, even with rapid growth, China's total coffee imports remain far below the U.S. So how does this gap influence Brazil's export strategies? Are they likely to pivot heavily toward Asia, or will diversification remain limited?
So in terms of the export strategies that we expect Brazil's coffee sector to pursue, we do expect diversification because general disruptions to trade over recent years have highlighted the importance of this and a diverse trading profile. And China will certainly be a part of this. For instance, the Brazilian Ministry of Development has signed a memorandum of understanding with Luckin Coffee, one of the coffee shop chains that I mentioned previously, and exports to Brazil have increased significantly. However, while we expect Brazil to see greater export diversification with other Asian markets too, as I mentioned, the US and Europe are still the largest consumers of coffee by far. So there is only so much diversification that Brazil can seek to achieve in the face of US tariffs.
Well, we're also seeing China boost imports from Africa, such as Ethiopia, Rwanda, and Uganda in particular. So to what extent is this driven by Beijing's geopolitical strategy strategy and trade diplomacy versus pure consumer demand?
Yeah, so exports from Africa to China of coffee have increased significantly. In the first 6 months of 2025, China imported 38 million kilos of coffee from Africa, which was more than double the 13 million in the same period in 2024. And we have seen the Chinese coffee shop chain Coffee, which I mentioned earlier, sign memorandums of understanding with Rwanda as well as Ethiopia and Uganda. So we believe that this increase in imports will continue in the medium to long term. And we highlight that this is a trend linked mainly to the country's geopolitical strategy, although it is also certainly driven by consumer demand. China aims to expand agricultural trade with Africa more broadly. For instance, they recently announced zero tariff treatment for all African countries it has diplomatic ties with. So on one hand, this is in order to meet domestic demand for high-value agricultural products like the ones that Africa exports the most of, which include coffee, cocoa, fruits, and nuts. But it's also just to continue improving relations with Africa as China continues to value South-South cooperation and wants to expand both geopolitical influence and market access in Africa.
Right. Well, speaking of Africa as well, infrastructure and logistics remain bottlenecks for African coffee exports. So how significant are these challenges for scaling supply into China as well as the overall Asia more broadly?
There is a real push from the Chinese government to increase imports from Africa. But as you rightly noted, structural challenges do make this really difficult. Infrastructure and logistics are poor in most of these African exporters, and they result in customs delay, inadequate storage facilities leading to loss of product, and in general, they weigh on the competitiveness of African coffee exports, both in China and Asia more broadly.
So what is your outlook for global coffee prices into 2026, Lucrezia? I mean, which regions or players are likely to have the biggest influence on the trend?
So our outlook is for easing prices in 2026, as we believe it is likely that some sort of agreement will be reached between the U.S. and Brazil to allow for Brazilian coffee exports to enter the U.S. market with at least lower tariffs. And so developments affecting U.S. consumption will be an important influence for market movements. We are also optimistic about Vietnamese coffee production in the upcoming season, in line with market expectations. This is thanks to above average precipitation. And we also note that elevated prices have contributed to market participants exiting the market or closing positions. So this lower liquidity makes the market more vulnerable to large movements in the face of news. So we expect prices to remain susceptible to significant changes over the next few months.
Well, then, given shifting trade flows, U.S. tariffs, and of course China's rising role here, what should investors in coffee futures, roasters, or related equities be watching most closely for the rest of the year as well as into 2026?
So in the short term, the main thing is U.S. policy development, as if tariffs were to continue for longer than expected, U.S. supply would tighten further, placing upward pressure on prices. And the opposite is also true. Also, the importance of the EU deforestation regulation. This is set to come into effect in January of 2026 after a one-year delay. The EU is also a large importing market for coffee. And while opposition to the regulation remains, it does seem like it will go ahead. And this will only allow commodities, including coffee, to enter the EU market with proof that they have not contributed to deforestation. So this could disrupt coffee exports to the market. And finally, on the supply side, two crucial markets to follow are Vietnam and Brazil. So the harvest for Robusta in Vietnam will start in October and end around February. So the progress of this will be crucial in affecting market sentiment. If it were to be worse than expected, this would place upward pressure on prices. Instead, with Brazil, weather conditions over the coming months and into the start of 2026 will be crucial in determining coffee growth and development of pods before the harvest in May. So again, poor weather conditions would lead to bullish sentiment.
Some great insights from you there. Thank you so much, Lucrezia, for joining me today.
Thank you so much for having me.
Thank you. That was Lucrezia Cogliati, who is the Commodities Analyst at BMI. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.